Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. In this video, we are going to be looking at delta neutral strategy. Okay, we are going to be looking at delta neutral strategy. So whether you are a beginner or a seasoned trader, this is an effective technique that you might find interesting, especially if you are looking to manage risk and keep your portfolio balanced. Okay, if you are tired of dealing with unpredictable market swings and want to build a more stable strategy, then this video is for you. Now, before we jump in, make sure you hit that like button and subscribe so you don't miss out on any trading tips and strategies. And of course, feel free to drop any questions in the comments below and I will love to help you out. Okay, what exactly is a delta neutral strategy? At its core, this approach is about managing and neutralizing risk, which is incredibly important in trading. Now, delta neutral means setting up your trades in such a way that your position's delta or market exposure is as close to zero as possible. In simpler terms, it's a way to protect your portfolio from big swings in the market. Now, for those of you unfamiliar, delta measures how much an asset's price will change with respect to movements in the underlying market. A delta neutral position means that your overall portfolio's delta is balanced to minimize its sensitivity to market fluctuations. The idea here is to have any gains in one part of your portfolio offset by losses in another, creating stability. This way, you are not as affected by whether the market moves up or down. Okay? So why would a trader want to go delta neutral? First and foremost, it's all about risk management. Remember that risk management is very important. It is very, very important because if you do not observe proper risk management, then you might not be profitable in the long run. It's not just only about having an effective strategy or having a working strategy. It's not enough because you might have a very, very working strategy, but as a result of poor risk management, you would end up losing a lot of money because profit is not guaranteed, irrespective of the strategy you are using. Profit is not guaranteed. So if you cannot observe proper risk management, the few times or the time that you make a loss, just one time that you make a loss, you might end up losing significant amount of your capital. So that is the reason why it is very, very paramount to observe proper risk management. Okay, so markets are unpredictable, as we all know, and while we would all love to know exactly which direction a stock or a currency pair is going, reality doesn't work that way. Okay, by balancing your delta, you are not relying on market direction for gains, which can be a great relief in volatile times, right? Delta neutrality is especially useful in options trading and Forex, where you are often exposed to complex market conditions. For example, if you have a position that profits in one direction but loses in another, delta neutral strategy can help offset those losses by adding trades that hedge your position. Okay, now let's get into the nuts and bolts of setting up a delta neutral position. There are a few ways to go about this, all right, depending on what type of assets you are trading. For options traders, delta neutrality can be achieved by using a combination of calls and puts, right? Now, let's say you are holding a call option, for example, which has a positive delta. To offset that delta, you might purchase a put option or add more short positions to bring the delta closer to zero, right? Now, in doing this, you are constructing a portfolio that will remain relatively stable, even if the market goes up or down. Okay. Another way to achieve delta neutrality is by adjusting the ratio of assets you are holding. For example, if you are trading in Forex, you can balance out different currency pairs to achieve a delta neutral stance. Okay, so by creating this balance, you are not overly exposed to any single direction the currency might move in, allowing you to remain neutral and focus on generating returns in a low risk way. All right. So now let us imagine that you are trading options on a stock that has, let's say, a delta of plus 50. Okay, remember that this strategy, the delta neutral strategy, is basically a strategy that tries to keep risk at the minimal. Okay, so let's say you are trading a stock that has a delta of plus 50. Now, to bring your delta closer to zero, you could add a position with a delta of minus 50, right? A delta that is in the negative, but the same value. How do I put it? Is just like the negative, uh is the same value, or the same integer that is 50, but one is positive, the other is negative, right? So one of the stock has a delta of plus 50, and in order for you to bring the delta closer to zero, you add a position with a delta of minus 50. Okay, you can another example could be maybe a stock with plus 50, and then add another with add another position with that of minus, let's say I stuck with plus 10, and add another with position with minus 20, with minus 10, right? Another example could be you add a position of plus 20, and then another position with minus 20, right? So basically that is it. So this could mean taking on a short position in the stock itself, or using a put option that offsets the positive delta. All right. As a result, your overall delta will be close to zero, which is exactly what you want in a delta neutral strategy. Another approach is to use delta hedging continuously, right? Let's say you started with a delta neutral position, but the market started moving sharply. You need to adjust your positions periodically to maintain that delta at or near zero, effectively balancing or effectively rebalancing as conditions change. Now, let's look at the advantages of the delta neutral strategy. The primary benefit is stability. Okay, this approach allows you to manage and reduce risk. For example, if you are trading a stock or a currency pair and the market moves unexpectedly, a delta neutral position will absorb much of that shock, keeping your portfolio from swinging wildly. Okay? Another big advantage is flexibility. With a delta neutral strategy, you are free to explore different assets and combinations without putting all your eggs in one basket. Now, this strategy also lets you play multiple scenarios at once. For example, if you think a stock is undervalued but don't want to fully commit to a long position, you can hedge with a delta neutral approach to protect against a drop in price. All right. Of course, there are some challenges with this strategy. Remember that no strategy is foolproof, right? No strategy guarantees profit, and it's important to be aware of the challenges that are associated with this strategy. All right. One of the main challenges is that delta neutrality requires active monitoring and adjustments. Okay. If the market moves significantly, your delta will change, meaning you may need to adjust your positions to bring it back to neutral. This can require more active management compared to simpler strategies. Also, some trading environments or platforms might charge higher fees for frequent adjustments, so it's a good idea to keep an eye on trading costs. That said, for those who are committed to reducing market exposure, the benefits can outweigh these drawbacks, right? So that's a rundown on the delta neutral strategy. This is a fantastic approach for anyone looking to build a more balanced, risk managed portfolio, right? So if you are a fan of risk management, and of course, every trader should be fans of risk management, but I'm talking about risk management on another level, right? Then you might find the delta neutral strategy really interesting. Okay, whether you are interested in options or forex or even stocks, delta neutrality offers a way to protect against market volatility. So perhaps if you are not a type that likes a lot of volatility in the market, if you are the type of trader that usually tries to avoid volatile markets, then maybe you will find the delta neutral strategy beneficial and useful, right? Because one of the things that the delta neutral strategy does is that it tries to protect against market volatility and keep your portfolio on an even keel. Okay, so if you found this video insightful, don't forget to hit the like button, and if you want more videos like this one, make sure to subscribe to the channel and turn on notifications. I'd love to hear from you, so leave a comment if you've tried this strategy or if you are thinking about giving it a shot. Thanks for watching, and I'll see you in the next video.